Good morning, everyone. Welcome to the room. As you know, trading futures involves risk, not suitable for all investors. Information and presentation for educational purposes, not a trade signal service, not intended to be financial advice. Hope everyone's off to a great start to the week. Yesterday's market analysis video kind of walked through some of the trades that I took. We can do that again this morning. The overnight came up and tagged that 2600 level, and then he kind of fell back down again. Over on the left part of my chart, on the daily chart here, the high from Thursday is important, 25.99 1/4, and so overnight we went about a point higher. And Thursday's low, the current low of the high bar, is a 25.62. So some potential for us to, be in a range-bound area yet again. Friday and yesterday we were inside of Thursday, but we've got some very clear support and resistance areas that if we break them, we should see some follow through. Anytime we go into a consolidation period like this, where we have 1, 2, 3, 4, now a fifth day sort of moving sideways, we can't stay in that forever. So we should be able to see some nice follow through trend days to follow. And I would think they would be later this week. Be a little bit surprised if we stay inside this range for the next 3-4 days. But with the government shutdown here in the US and some other things in limbo, that may be exactly what happens. If I pull up the market profile, yesterday was the first day that we did not fill the gap. So we have an unfilled gap above us at 25.95. That was Friday's close here. And so we didn't fill that gap yesterday. Got a little bit of space above us. You can see yesterday's profile pretty wide and not a big range. And you can really see the overlapping consolidation. You have these point of controls that are very much pretty close to each other. But then as we go up, obviously the start of the year, this is as high as we've been. So there's some open space there. If we go down, you start to get these single prints, thin columns. Again, and the more single prints, one column of trade, a little bit thicker on this day back here. But then as we start going to the left, there's not as much overlap. You've got 2 days overlapping here, more single prints, fairly thin here that's overlapping, coming down again. A lot of single prints down here. So what I'm getting at is there's a lot of room for us to, once we get outside of this congestion, there's a good potential for us to get some follow through and have some steam. That the steam that's building right now should turn into some good trading days. Although yesterday, even though it was an inside day, we can walk through those trades again, and it was a pretty good day. It felt like, at least in the morning hour and a half. That was all I really traded. So let's go to that while we're letting the market settle out, which is not very volatile so far. Breadth and advanced decline line pretty tame. If we look at the SPY, the volume's a little bit clearer. Big increase on the decline, and pretty much every day on the rally has been lower volume. So what'll happen is we'll either get a spike up or a spike down. That'll be bigger volume, and then we can either go into a pullback and see what sort of reaction happens at the 50% long, or if we move a little bit higher, maybe just up to these lows just above us, provide a little bit more resistance. I'd be very surprised if we went all the way through to, say, this swing high. Just going to mark the open on my market profile. Opening right near yesterday's point of control, 25.86. I know some of you put the value areas and the point of control on the chart. That's perfectly okay. I just don't like to have too many horizontal lines on my chart, because it ends up, you can kind of trick yourself into thinking, oh, there's a horizontal line here, the market's going to stop here. I fully realize that when we draw up a retracement, we're drawing up some horizontal lines, but I try to keep those to a minimum. Going from the pre-market here into the open, some decent retracements you can see, moving up to the negative 23% target. Next one, pulling back, moving up to the negative 23% target. Next one. So, pretty good, technically good adherence to those types of moves. If I go to yesterday, so yesterday was an inside day, and outside of the morning, things got a little bit not so good, I guess, or kind of slowed down, and I didn't see much after the first 2 hours or so. But yesterday morning, we started in a nice little uptrend. We did have a high tick early on, about 23 minutes in. And so that high tick set up in a very small short here at 25.80.50s. And so I took that short, took it down, rode 2.5 points for the first leg down. That's where I put my first target. On these counter trend trades where we have a high ticket highs and I'm taking a short, or a low ticket lows where I'm taking a long, I like to use a little bit bigger first target because they tend to move very quickly and the reward is typically a lot bigger, and the drawing is usually really tiny. So I use a little bit bigger first target on that, and then I'll start drawing up the full retracement just to make sure that we stay below that 61.8. And if that breaks, which it did yesterday, then the trade is over. I had my stop above the swing high, and we broke the 61.8. Also below from lows to highs, we had set up, we didn't come down all the way and touch it, but we did set up a halfway back of the day, trading hours low to highs. And so knowing that that was below us, that we didn't even come down and touch it, we got pushed higher before we touched it, getting rid of that short, or getting out of the short, taking the very first long setup on the 512 after this larger setup at 79s, that set us moving a little bit higher. We at least made it to the target of this larger setup. So here's the larger retracement that traded up to its negative 23% target. And just by trailing swing lows on the way up, I was able to stay in until about here. And then we pulled back into the next larger setup. I'll get rid of this first one to clean up the chart. And then same thing, drawing the long is already in play because it traded. If I draw up the short then and watch for that 61.8 to fail, we came up to it, touched it, came down to the 50%, bounced, and then broke the 61.8 here. That means the long is then game on, full on, drawing the very first 512 after the bigger setup. Market pulls back, just rounding up to 82s, adding a tick, 82 and a quarter, and then riding that up. This one had a little bit deeper pullback to here before coming up and hitting its target. So again, using either the negative 23 or somewhere around 2 points for your first target. And if, let's say you've got 3 contracts, you can use the larger, and you end up with sort of these layers of retracements where you have a bigger retracement that you're not taking that blind limit, you're just using that as your, let me see if there's some support there. When we get that bounce, drawing the very first setup to follow in that direction. So I drew up the long, I noticed there was support, we started to bounce, drawing up the very next setup that's a little bit smaller, using that setup's negative 23% target as your first contract exit. And what I do is, so I've got my bracket set to 2 points for that first contract, and I just come and look and I say, okay, well, 84, 64, if I were to round down and subtract a tick, that brings me down to 84 and a quarter. My entry is at 81 and a quarter, so that's only 1 point. So if the negative 23 is larger than 2 points, then I'll usually raise it up to that negative 23. If it's smaller than that, I'll usually just end up leaving it alone at 2 points. The idea is to get 1-to-1, or ideally, a little bit more than 1-to-1 on that first contract. You don't want to just take it off for a tick or 2 ticks, or you don't want to have 10 contracts and take 6 of them off for a point, because that really throws off your reward to risk. So if you've got 3, getting out 1 at the smaller first target at 2 points, and then you can set the larger negative 23 as another target. It's okay to, you don't have to trail every single contract. So I'm out, let's say we're using the 3 example, I'm out of 1 at plus 2 points, the market pulls back, it comes up, it breaks a high, the swing high, and so that allows me to move my stop underneath the next swing low for the second 2 contracts, and shortly after we hit the target 87s, so that gets out of the second contract, then the market pulls back and stops me out of the third. So that's kind of how I would manage 3 contracts in that situation, where you have a larger setup as well as a smaller setup to follow. So far today, kind of looking like yesterday, where we open and then start moving a little bit higher. This is a gap up from yesterday. So we do have yesterday's gap, which I'll mark unfilled. And then the gap from, it was what did I say? It was a 95, which we've already filled. So that didn't take very long. It's helpful to keep those gaps on your chart, because they do fill later on. So 25.99.50. Remember, we went in the overnight. We went to 2600 and a quarter here. So the fact that we're moving in that direction now is a good sign that we may break this 2600. And it's not such a strong ceiling that, you could do a buy stop above highs, but there's not so much volume here where I think there won't be any sort of pullback. I mean, just already this morning, even in here, we're getting, markets pulling back to its 50, coming up to negative 23% target. So we should have some opportunities today in the retracement area. And remember that full retracement on the daily short, if I take from highs down to lows, is about a 42. So just above where the current 61.8 is at. Did I say so much volume, Mike, or not a lot of volume? When we look at, like I've got the volume here on the daily chart, let's say. So there's two ways to look at volume. On the actual cumulative volume for the day, how many contracts were traded, we can see on the move down, pretty high numbers. And if I just leave my cursor here, we'll just move, we'll call this average right here. And then now on the move up, if this was average on the move down, we're way down here, average volume for the move up. So that's one way to look at volume. The other way is with the 512 tick chart and just looking at how fast the candles are forming. So down here is the number of transactions, boom, boom, boom. Once that gets to, in this case, 512, then the candle closes and the new one forms. These are not moving that fast. And that's okay. I mean, we're very much still in this consolidation couple of days here. But if we can get out above or below, I've got these two horizontal lines that are bracketing out Thursday, then we should be able to get some more volume and trading happening. So we came up to 99s. We don't have a full retracement yet. Setting up a lot like yesterday so far, except this is not a high tick. It did break lows, or break this swing low. Draw up the short here is that we've got a long that's sort of still holding at 61.8. I would consider this 25.97 a little bit higher risk, but it does have bigger reward. If we were to sell off from here and fall down to lows, that's already a 10-point move to the downside. But currently, the trend on the morning is up. We do have the NYSE ticks moving down, which is always worth noting if there's a divergence. So the market's moving up. NYSE ticks are moving towards the zero line. So 97s would be, so we've got the long already trading at 96 and a quarter. So that kind of makes you have to pass on the short. So if the long already traded, whichever one trades first, you kind of have to put that one, give that a little bit more weight, even if you say, oh, well, I feel or I want or I'd like to take a certain trade. You kind of have to go with what you see. And typically, I wouldn't call yesterday aggressive, but usually on inside days, I'm not taking too many trades early. Yesterday, it was a pretty clean start to the day, so I saw some things setting up pretty well. And so again, just maybe my bias might have been, well, we're inside day, got to be kind of careful, but I'm still trying to just take the information that I see and trade off of that. So this little 97.25, very small setup following a larger setup, starting to get some legs, and only 99.75, but it is a break above Thursday's high by a couple of ticks. So this area is always important when you're breaking a prior high. You know, do you break through and get resistance, or do you break through and fall right back down? $98.50 would be the next long here in the series, and we did make a new high, 2,675. If this one fails, though, then we should go hard back down to lows of the day at least, or make a move down. Don't have a high tick of the day, but interesting on this divergence of the nicey ticks moving down. So we'll watch and see. Especially with so many days of decreasing volume, that really makes a strong case for sort of this rally losing steam. So we traded up by about 1.5 points, straight up, straight back down. Didn't break the swing low. Just came right back to that prior retracement. I guess technically we broke this guy by a tick. Which would make 98 the short, because I'm rounding down and then subtracting a tick anytime it's an odd number like that. A little bit of a widening here, not much, but we still have room to make a deeper pullback before making a leg higher. If that's one scenario. You know, the market comes halfway back and then makes another leg up. Low tick of the day on this move, on this low, not the low of the day, but again, sort of a divergence with so there's that 98s. We'll see if that gets any legs. To look quick here. Doing the same thing in the YM and the NQ. Anytime the breadth is at inside 2 to 1, that can also be a good sign that it's a fairly balanced market, not polarized to either side. Basically, folks are buying, folks are selling, and pretty evenly. So breaking this swing low here, it'd be okay to move the stop down to 99s. We came up, made the one candle pullback, and then basically tested twice. So at least that tightens things down to a point of risk instead of a point and a half. So that's, just by using the chart here, this low being lower than the prior candle's low. At a pretty important area though, because we either come up, fail this short, in which case we've failed a long, failed a short, back to back, or this short gets some steam and maybe moves down towards the 25.93 area. So I always try and note sort of what things have happened up to this point, and remembering that, the long, just 5 minutes ago, the long had failed, and then the short set up. But when you have a long and a short failing back to back, it's a very, that's clearly a sign of indecision when neither one can get enough steam from either party, either side. I'm always a little more inclined to go with the direction of the NYSE ticks than I am with the larger trend. It's not 100%, but you glean a lot of good information from what's actually happening with the market internals under the hood versus just seeing what's on the surface. So here, technically, this would be a double bottom. They're really only, I don't even know if I call this a swing high where these two green candles are. Developing 61.8 is at 90, we'll call that 98s. So if you want to move to a 98 stop, it's pretty tight, it's break even, it protects you. It's a valid adjustment to the stop just based on the next potential 61.8 here, and because we have stopped at the exact same point, double bottoms tend to be fairly strong patterns. So what happens is it either holds as a double bottom and we break out, or it starts to look like a double bottom for 30 seconds and then we break down. But either way, if it's going to continue, it should continue from here without coming up and retesting. And this one looks like it might go back up. So good protection there, as the trade starts to develop. A lot of times, I guess probably one of the more common questions I get is, what do I do if the trade's going in my favor, but doesn't really get a quick breakdown? We got a lot of red and green in here. It's been 5 minutes, and all we've done is kind of come down and retested this low that's only 2 points away from the entry. And so the first thing you can do is, like I said, leaving when the Negative 23 is really far away. If you want to use 1.5 or 2 points as a sort of initial target, you can. And yeah, see how quick, boom, when it fails like that and you go through. Could get kind of challenging today. Here now we have a high ticket highs on that spike. So I'm really pleased with the way I managed that one. Assessing the chart, using the swing highs that are really all we have to go on, and then using the developing 61.8 as a way to protect the position, meaning staying in the trade, giving yourself upside without taking excessive risk, or I should say giving yourself upside while at the same time taking off risk to the downside. And I think that's something that can turn a lot of those, minus, if you're using a 6-tick stop, that can turn a lot of those stop outs into scratch trades like that one was. And you have a couple stop outs that are now scratch trades. You have a couple scratch trades or small losses that are now small winners because you're taking off one contract at a reasonable amount of, say, 2 points, and all of a sudden your P&L can switch fairly easily. So another high ticket highs. This divergence still interesting. On a typical trend day, you would start to see, a high tick made in the nicey tick, and then a new high made right away. O2s. Let's see what this looks like. 575. We put the stop above highs. Not that I'm hardcore counter trend trader, but when you get these high ticks at highs, they're hard to ignore. And because we've got a little bit of traction earlier, so 575 with a stop at 7.25. I'm okay with that. If it just breaks through and rips into new highs, it's worth a shot. Uh, 30-minute high. I should have marked that a little bit earlier. I guess we're right there. Yeah, I think today is going to be a little challenging, just based on how the market's moving already. All that really is just a observation based on seeing the market get reactions at the 50. All three trades have reacted at their 50%, but haven't really materialized, turned into much. This swing high is a 6. It would be a 675 if we go a little bit lower, at least to 2605s. Okay, there we go. So 2606.75 is where I've got my stop now, just above this swing high. And then 2 points on that first target. So it needs to go to 04s. I guess here's the negative 23, but remember, there's all this room to run, so I'm okay taking a small, I'd rather take a small loss here than with the potential for it to, drop and give me 10 points, than, take too much off. developing 61.8 is basically non-actionable here because it's so small. But if we can get to an 04s, there it is. Actually, an 0375. Come on. Come on. One more tick. The full retracement now is what I would look at, and it lines up above this swing high, 06s. So 2606, basically one tick above break even there. You go 6 1/4 to give it a little bit of room. You know, 1 tick versus 2 ticks is not much of a difference. If it's going to roll over and hold these swing highs, then it's going to not even come up to that level. So another strategy is if the distance between the 50 and the -23 is really small, you can use the -61.8. So if you're inside 1-to-1 and the -23, I mean, to keep things simple, 2 points is just a great, boom, my first target goes out at 2 points in situations like this, where it basically lines up exactly with the -61.8. If you want to bring it in a tick, that's fine. I don't want to micromanage too much, but I want to use the chart as much as I can to make my decisions versus using myself. So here, if I take this swing low down here to highs, you can see a little bit of support below us. That may be enough to lift us up and kick things out. But if we're going to go short, this is probably the last time that it's going to happen. Or if the short is going to turn into something and give us a bigger retracement, this may be it. You can see I've got the 30-minute low marked, the 30-minute high marked, and when we're sort of at this juncture where we're right on top of the first 30-minute range high, we're either going to bounce or we're going to break through it and then come quickly down, which lows is about an 85. So we wait and see. On some days, you know, you get 5-6 trades and you get a handful of break evens, but if they're all kind of getting momentum or getting a first target hit before they reverse, I'm okay, you know, continuing to trade. Sometimes those turn into, there it is. Got my 04s. The markets just need some time, but if you're having days where it's stop out, or you know, you're not getting any traction, those are the days where it's important to shut her down. So got the first target hit. I'm going to leave my stop at 2606. Oh, okay. I guess we're moving now. So like I said, you're into the first 30-minute range. And remember last Tuesday, quick. So got to start trailing each candle's high, prior one. Okay, so I'm down at 97, 98, 99 rather, sorry. Oh, there it is on the 1. Okay, now I'm going to draw the next retracement. It's kind of high up there. So 99's, okay. 2603 is where I've got my last contract. Normally I wouldn't. With 1, I'm okay having 1 be fairly high away. 3, I'm going to go 3 1/4 just because that's 1 more tick above. But I'd be... Okay. So now we can go above here at 0250. Because we broke this little swing low. I'm just going to leave it alone for right now. If we come down and break this swing low here, it already bounced 5 points. What's another point? So I'm going to drop the opposing, let's see here, low to high. The opposing long has broken, so that means the shorts definitely got some more legs. We can come down. I'm going to start trailing the 60-18 of the next developing short. 26.01 1/4. Just because we've been very much, I know that's a little bit aggressive, but we're still up close to highs. I need to get up the long from lows of the day to highs of the day. Should have had that up a little bit earlier. Yeah, so that's pretty much just about where we stopped. So I'm going to keep trailing now. I got 1 left. I'm going to trail 26.01. See, once things get away from your entry, basically, once you get that first target hit and start breaking swing lows or swing highs, it doesn't. I mean, you're so far away from your entry that you don't really have the risk of it coming back. But if you micromanage too much, you get caught up in the weeds and you end up not really even getting to see the trade play out. Okay, so here's a double bottom right at the 50% long, 2600 1/4 is where I've got my. How's that, Ron? Is that a little better? Might have cut out for a second or two. Okay, great. So swing high here at 98.25. The next retracement short, 99.25. I'm just going to leave it alone. 25.99.25. Now, if I wasn't in a trade, or even if I am in a trade here, looking at this as a 50% halfway back of the day as an important level, breaking this swing high and breaking the 61.8 would set up a nice long. So again, where would I want to be out when the short fails? Well, where does the short fail? When the 61.8 is broken. And that's a decent distance there, 6 points, but with only one contract and the potential for us to go. Usually when we break into the first 30-minute range, we come all the way to the bottom. So that's kind of what I'm taking into account. So we shall see. We got to break the long 61.8, which is a 93. Three contracts is definitely that sweet spot. You know, I like to do multiples of three a lot of times, so that you can do a first target, a conservative trail stop, and an aggressive trail stop, and you have a few contracts to play with. So technically this high has broken these little swing highs here. I'm going to draw up the opposing long, which happens to line up with the 50% long as well. So if it's going to go higher, it should go higher from here. If we break the 61.8 right away, then we should drop hard as well. So it'll either go up hard or go down hard. And I say that because you're either going to have longs that'll be stopped out or shorts that'll be stopped out. And so there should be enough trades on that it gives it a little bit of a push as those stops get hit, and then traders can jump on by saying, okay, well, the halfway back of the day has failed, so that means we're going to come down to lows, or the halfway back of the day is held, and we're going to move higher. But if we stay in this first 30-minute range, then that could lead to a very big slowdown here this morning. Big inverted hammer developing candle. there's the break of that 61.8. Break of swing lows doesn't really give us much room. So 95.75. Why don't we just come down and do the next developing 61.8. So 96.75. And if we start moving fast again, I'll just get aggressive with the last contract and trail each candle. So I've got my stop at 25.96.75. So my stop is now just about 10 points away from the entry. I mean, it's once you get a couple points away, it becomes a lot easier to manage. Remember yesterday's gap fill, 25.80, or yesterday's close, 25.80. Yep, 80.75. Nope, there it is. All right, so that one's done. Looks like when the audio blipped there, the recording stopped, and it won't re-engage. So I'm not sure if we'll get the tail end of that one recorded, but we'll review it here before the session's over. I know sometimes this stuff happens super fast, and I can be a little bit distracted at times as I'm trying to go through the trade and verbalizing my thoughts, I suppose, is the best way to say it. So we've broken. So what do we have? We've established a high and low for the first 30-minute range. We're about an hour into the day. Technically, we've broken the 61.8 of the halfway back for the entire day, broken it by a couple of ticks here. I'm going to leave it drawn up because it is a big level. And if I were to use, on this 30-minute chart, so what I'm using is trading hours only, that's broken by a couple of ticks. If I draw from yesterday's low, like a continuation swing low, that 25.92 is holding. So I'm just going to leave this drawn up for now. I'm going to leave the short drawn up as well because it hasn't broken its 61.8 or hit the target. We broke lows, we came close. The developing short has failed, and we're sort of hanging out right in this 50 to 61 area. So I'll leave that. If we start moving higher, it'll be important to note where the big opposing short is. So highs down to lows, and that's up at 2,600, big round number again. So at this point, just going to be a waiting game for us to break 25.99s. If we come down and break the swing low, what you end up with is this very staggered movement down to the negative 23. Here's the 50%. Here's the negative 23. Well, if we get there, we would have done so by way of making these big swings. So then, if you take this as your anchor point down to the negative 23, you're sort of crossing through this swing high as well, and you can have a little bit more chop around those entries. Might be a little bit hard to visualize, but if it sets up, we'll talk about it. If not, we don't need to worry about that. How did the NQ react to that move down? Well above its 50% still. YM down at lows of the day, so kind of a mixed bag. Keep in mind, again, the two horizontal lines that I always put on my chart are the high and low for the first 30-minute range. They give us a good picture of where are we in relation to the opening trend. And today we're smack dab in the middle right now. And anytime you're in the middle, just like back here, I was talking about how when a long fails and then a short fails, that can be a pretty dangerous area, being in the middle when the market trades through the middle without stopping. That's a lot of times what you see in the middle, trading through without stopping. So that's why range-bound days, it's better to play shorts at highs, longs at lows, than it is to try and trade blind limit orders right in the middle of the trend. Not saying today is a range-bound day per se, but when we have the high and the low from the first 30-minute range as our reference, I would be looking to be active at 2603s, at 2585s, and those could be longs or shorts. If we're above 2603s, I'd be okay taking a long. If we're below it, I'd be okay taking a fading short. But right here in the middle, definitely going to be a little more cautious. So now we're getting close to this 61.8 break. Pretty low volume across the board, especially on these bigger names. I think it's more of a result of waiting as opposed to meaning a whole lot. Like you can't put much weight on the low volume, the trend that we have right now because it is low volume. I think a lot of folks are starting to just kind of play the wait and see. As am I at this point. Getting pretty messy and very horizontal here. Here's what our market profile looks like. We were trading up here. We took the short, and all we had was single prints to take us down back to the top of this value area. So lots of room for us to fall. Below us, here's yesterday's close, not too far. We came down to right about Friday's value area, yesterday's point of control. Or that's where we opened, but we came down to the top of value area, and Friday's point of control. That time I just stopped talking, Sharon. So pretty messy along this halfway back of the day. Just leaving that 61.8 up, waiting for one of the two to break. Sometimes these bull flag here, this pattern where you kind of go straight up and then move sideways, it can last an hour or two. And a lot of times I'm done by hour and a half, 2 hours into the day. I don't usually stick around too much longer than that unless I'm in a trade or we're coming up to a bigger level or something like that. Well, while things are slow, let's kind of go back and rehash the short up here. So up at highs, we were moving up pretty quickly and then hit that high tick at highs. So the nicey tick over here, we had a high tick that lined up with the high price. And so I'm just taking the very first short that sets up after that. It's usually really small, like my stop. So 26.0575 is a pretty small drawing here. The negative 23 is barely a point and a half away, so they happen really quickly. But the high tick at highs sort of signaling a potential high for the day, or at least a potential for that next little while. of the high. So we had the high ticket highs that kind of signaled the short, put on the short at the 50% retracement, let it come down, had that 2-point target out there. Once we started dropping quickly, I just trailed my stop above each. I didn't even have time to do it above each candle's high. I was about down here before I could move it. And I was just trailing above the prior candle as fast as I could. And I ended up getting out at 99s on this little move up on that middle portion of the trade. Then that last contract, I just trailed, the developing 61.8. And I just mean the next high to low. I left it up here. Then we sold off. We got that double bottom, started trailing the next developing 61.8. And eventually we just kept moving down, trailing the next developing 61.8 before getting taken out up here. So once the trade gets moving away from that first target, and just by trailing swing highs, you can lock in a lot on the way down and still have opportunity for more. I found that's the best way to manage the emotional side of things, manage the trade well, and also be able to capitalize on the meat of the move. You're never going to get out at the exact high or the exact low, but capturing a portion of it is the best we can do. And now, because we're sitting at the halfway back of the day, right here, moving pretty sideways, just gonna sit tight. That may be it for the morning. For me, the 61.8 above us here, and then the 61.8 below us. If this short breaks, I'd really look for us to break the full 61.8. So we either, whenever I draw the opposing, meaning the long is traded first, so I draw the opposing short, and there's that break. We either don't touch the short and then a long can be in play, or we have to break through it and a long can be in play. But if you touch the short, then you have both trading, the long and the short, at the same time. This is a little bit bigger level, a 97.75. So either letting it trade and then taking a little long off of that. That might be the better way to go. Again, this sitting right at the highs from Thursday of last week. The more you watch, the more you trade, whether it's sim or live, the more familiar you become with the retracements, the easier things uh, will become in terms of being able to spot moves and filter through, okay, this is a good setup, this is a not so good setup. If I focus in on the first half hour, you can see much cleaner chart. When I move over to the second half hour, just visually, you can see a lot more chop. And there's a lot of times where, just a couple of trades in a morning session go a long way for, you capitalize on a couple of trades. The first couple didn't really have any traction this morning, but then you have one good winner. You're not really trying to hit a home run. You're sort of swinging consistently, and sometimes you connect, sometimes you deflect a little bit and end up with a scratch trade, and other times you connect and really hit a good one. I think not forcing things is really important. Easier said than done, I know. And back in chop mode, or chop mode continues. We'll call it that. So I don't like this 97.75 here as a blind limit just because how choppy we've been. If we tag it and immediately go up and it cleans up, then great. We can take, I could take something off of that. I'm totally fine with that. But right now, yeah, there's some supports from these highs here, but the possibility of us retesting or being dirty is really high. Yeah, Robert. So to detach a chart with Thinkorswim, if you come up here to the three arrows, I'm sorry, you come up to, so I have the ability to do different grid layouts here. So you want to come up to your grid box, and then when you hit detach, why am I not seeing detach? There it is. I'm sorry. All right. So not the three arrows on the individual chart. You want the three lines. You want the three lines next to the grid in the far upper right. That's where the detach is. And then when you hit that, it will pull the charts out. Now, the other thing you might want to do, and you might use the word detach. So now I have two chart windows. The other thing people like to do when you see I've got both ES on both charts, but when I draw a line over here, it doesn't mark up this chart. So to detach or separate those two charts, you come down here to drawing set, and I've got one as default and one is unattached. So if I make both of them the same, they're both drawing sets are titled default. Now if I make a drawing over here, it pops up on the other chart. But I don't like that, so I just set my other one to unattached, and now I have two separate drawing sets. So that's two ways to either pop out your window or to separate the two charts. I'm not sure if you look at the economic calendar, I'm not sure exactly which numbers or economic reports will be reporting and which won't. I would guess most of them will, but we've got a fair bit of news Wednesday, Thursday, and I'm not sure how many of those reports will be affected by the government shutdown or not. Or if we come out of it, then that's fine too. So I draw up the opposing. The long has traded, but I want to draw up the opposing, see where that puts us. There's a break. So cleaning up already from earlier. And that long is a 97.25. Didn't quite have it drawn up in time. But that same process, you identify the long, it trades, You draw up the opposing, and then you can draw up the very next long setup. It's just not quite quick enough to get my hand on the other mouse. And then use that first target here at the -23 or 2 points away, and then try and trail, hopefully into new highs. That's how I would manage that. So this long, I didn't get or I didn't have it drawn up in time to get an order out there, but it was a 99 and a quarter, just rounding up and adding a tick. And then the 97.75s, technically it was valid, but having seen so much chop leading into it, it was definitely higher risk, and would that one have held? Traded down to a 96.50. Yeah, I can't get them all. Oh well. So here we are back at the top of the first 30-minute range. We'll either hit resistance here and sell off or punch right through. So had I been in this trade, right here, you could start drawing up the next retracement and move your stop up to a 2600 even. You can use this as the next entry, 2601 and a quarter. The fact that we're up here, we may not get the full pullback. It's higher risk because we've tagged the top of the first 30-minute range, and that could be resistance in sort of a high tick. So yeah, I don't like that. 55s, 55s. Not the high tick of the day, but a somewhat high tick. Yeah, and there it goes. So would have been out anyways at 2600 for basically scratch or a small gain. So, but it was a good trade, or would have been. I would have taken that one every time for sure. Developing short. So if I come and draw the full retracement short, we can see that's broken. That 61.8 is broken. Wasn't the exact high tick of the day. Yeah, I mean, that's a good point, Ron, or Robert. No, Ron. Yes, that question. 2600. Now that this swing low broke, 2600 and a quarter off of a relatively high tick is all we're going off of. We tagged the top of the first 30-minute range, so taking a short at 2600 and a quarter is fine. I mean, the longs below us are still in play, so you're going to have a lot of kind of tug of war But if we cleanly hit that, and we still have a high tick that lines up with the high of the day. So yeah, this short could be the one that moves us down to 85s. Good eye. But either way, breadth, advanced decline line, still very balanced for the most part, almost an even push and pull between the two. So if you get into a situation where you have a good morning and you don't really know, well, when should I stop? Just giving yourself, two losers in a row is a good habit to get into, whether it's two losers at the open or two full stop outs back to back. Okay, I got to be done. I can't dig myself a hole that I can't climb out of with 4, 5, 6 losers after that. And if you have a good morning, limiting yourself to 2 consecutive losers, stopping after that occurs is a good way to prevent yourself from giving back a lot of gains. Yeah, so we still have the daily long, this next long, kind of pushing from below. You have the 30-minute high and the high of the first 30 minutes plus the high tick of the day, sort of pushing from above, and yeah, kind of messy in here. So I'm gonna. It would be cautious until we get outside of the first 30-minute range, and even then, with the high tick of the day, we'd have to break highs to offset that. So be careful if you're going to trade the latter part of this morning. A few good moves here early, and then kind of went into a much choppier pattern. Still getting some reactions at the 50s, but unless we see a major change in the breadth in the advanced decline line, better to play it safe than be overly aggressive. So I don't think we got the second half of the session recorded. I'll see what the processing gives us, but so apologies for that. But if you have questions or want to talk more specifically about any individual trades or anything like that, feel free, shoot me an email. I'm happy to conversate more. So I think we'll wrap it up there for this morning, and I wish everyone a great rest of your day, and we'll talk to you soon. Thanks, everyone.